The global economy in recovery and a share sale this year, bolstering Credit Suisse balance sheet. Just how confident is CEO Tidjane Thiam feeling as we head into the end of the year? Well, he joins me now for an exclusive conversation on surveillance ahead of the bank's Investor Day in London on Thursday. Mr. Tidjane Thiam, as always, thank you so much for joining us.
Good morning, Francine. Thanks for having me.
So it's been a while, and actually you're slowly progressing towards your goals. What comes next?
Look, next year is the final year of the restructuring, as you said in your introduction. We feel the strategy is working. We focused on wealth management. Just to give you a number, we believe that personal financial assets of people with more than $1 million grew by $26 trillion in the last 10 years. 17 in emerging markets, 9 in developed markets. So that focus is just, we think, justified, is paying off. We believe in the integrated strategy we have of having both wealth management and an investment bank. We have right-sized the investment bank. We're happy with its current size, and it's progressing well. So, look, one can never, should never be too happy. But as far as we're concerned, we think we for a year and a half of work, we've had good progress.
So talk to me about cost cuts. Okay, you're targeting, what, 17 billion in costs in 2018. Correct. What comes after that?
Correct. Well, it's a bit of a tricky exercise, our conversation with this morning, because we have our Investor Day Thursday, so I'm in a bit of a close period.
Of course.
So that is something we will discuss. We will discuss then. I can only limit my comments to what we've discussed publicly. We did 1.9 billion of net savings in 16, 1 billion so far in 17, so 2.9 billion. We believe that that's very, very competitive in the industry compared to our peers. But fundamentally, my belief, and I can say this again, is that any organization should improve its productivity by 2 or 3% per annum. I've always said that the big restructuring was to reach a plateau from which we could evolve at that pace, because that's the pace at which the world economy is evolving. And if you're not doing that every year, you're falling behind. Fundamentally, when you have to do a big cost reduction program, it's because you have not kept pace with the industry and the economy by paring your costs by a few % per annum, which is more effective and less painful than having to do what we just did.
But in terms of, for example, so where do you see the growth coming from? I know you mentioned the wealth management. I know you've mentioned many times Asia. But again, if you talk about productivity, then you need kind of, a growth for revenue.
We are very positive about the world economy. We're very positive about the US, very positive about emerging markets, and within that China, and noticeably very positive about Europe, which is new. Because with the election of Mr. Macron and the turn of things in France, you have a Franco-German engine there that can power the European economy forward. So the key thing in this comment is the synchronicity of all this. For once, we have the 3 major economic zones doing well at the same time. If you look at what are we focused on? We think CAPEX, capital expenditures, is back and very strongly. That's a major shift in the world economy. And it can create a scenario where you can have both high growth with low inflation, because productivity gain, back to our topic, fills the gap. Okay? So if you invest in capital and productivity grows, you can get into a very healthy growth scenario. We also, after CAPEX, the other big theme I was concerned about was QE. And Quexit, if I want to use a term, exit of QE, I think that's being well managed.
Because it's slow.
It's slow, it's gradual, and the communication around it is very good to drive market expectations so that we don't have an accident. When asset prices and asset valuations are as high as they are, it's important to almost take the investor by the hand and not surprise him or her. And I think so far the central banks have done a really, really good job at that. We think emerging markets will be all right. So CAPEX, QE, M&A, we think that with the strength of corporate earnings and the cash sitting on the balance sheet, and still the availability of credit, because in the background of that you have our industry. The lack of availability of credit was put a damper on growth since the financial crisis, and that's starting to shift. So we can support our clients in their M&A ambitions. Emerging markets, China, which is a big consideration.
And you're not worried about China? I mean, the new PBOC governor, whomever he or she may be, is going to have a lot to deal with in terms of tools and a huge debt pile.
You can look at China in any number of ways. One way I like to look at is GDP per capita. If you look at GDP per capita in China, It's about where the US was in 1950. 25 years ago, it was where the US was in 1825.
Yeah.
So they've done 175 years of American progress in 25 years. That's the pace of the transformation we are witnessing. There's plenty of growth still available. For me, the good news has been the focus on stability and stability of the currency. Because if the currency is stable, it reduces the likelihood of a trade war. Because if people think the renminbi is correctly priced, there's less likelihood of trade disruption. And it also reduces the pressure on the foreign reserves because it reduces the capital outflows because there's confidence in the currency. So for me, the main thing in the current economic mix in China is the focus on the stability of the currency, which I think is correct. And the final thing, I think, which may surprise you, on which we're quite focused, is really millennials, because we think it's one of the largest generations in history. I think that's very well. If I can plug our investment outlook for 2018, it's very well covered in there for Credit Suisse. And we think they're changing the world economy. You notice we took an initiative in impact investing with Marisa's appointment recently, but that is a major theme for millennials. They're behaving differently from previous generations. The emphasis on clean energy, success of electric cars, the fact that they're fully digital, these are all fundamental changes in the economy that are there to stay.
Tidjane, I wanted to come back to your APAC business. Some think that maybe your targets are too ambitious. Do you refute that?
Look, we've changed them. All I can tell you is that we have a wealth management target and consensus. We have a target of 700 million of profit for 2018 in wealth management. Consensus for 2017 is 730. So consensus for 2017 is above our 2018 target. And if you look at Switzerland, the target we set was 2.3 billion of profit by 2018. Consensus is 2.1. That's 91% of the target. So if consensus is 91% of the target set 3 years ago, I think that's okay.
Are you pretty much happy with the structure of Credit Suisse at the moment? Again, one of the things that people may want is to kind of see you have a wealth management unit as a whole.
I was pleased to see. I always read very closely what the peers do. I saw a peer recently announcing that they were moving to a geographic organization. And I know the statement almost by heart because I read it, because markets are very different and it's very important to be agile and to decentralize and create local accountability and client focus. These are all the reasons why we adopted this geographic organization, and so far it's worked for us with 33 billion of net new assets in the first 9 months of 2017. We think that has worked. What you want to do is to have a decentralization, focus on the client whilst capturing efficiencies. And I think with the cost savings, we are showing that we've actually been able to do both, grow and also be efficient.
Talk to me about consolidation in the industry. So we understand that UBS may be looking at Commerzbank. There was a change at the top of Julius Baer. What does it mean for your competitors and therefore the impact it has on you?
Maybe a quick word on us. And one of the first objectives of the strategy, as labeled, has been to grow and generate capital organically. So we are very focused on the execution of our organic growth strategy. We believe that the opportunities with 33 billion of NNA in the first 9 months, there is so much growth out there that we feel that keeping our model pure, staying focused and executing well is our priority. So any comment I make should be taken as a general industry comment, just a caveat. Look, it's not a secret that some of the best performing banks, look at America, have been the product of significant consolidation. Scale is positive in our industry, and it's quite easy to make a case that the industry in Europe is too fragmented. I'm not the first one to say this. I won't be the last one. I think all my peers in Europe agree. So after that, it's a question of feasibility, opportunity, and execution.
Do you think are you gearing up for a phase of consolidation? Is it 2018 the right time? And whether you're part of it or not is another question, but will it change the landscape?
One of my fundamental beliefs in the industry is to be a successful bank, you need a profitable, strong domestic market. You will be hard-pressed to find a successful bank globally that doesn't have that. American banks have that in profusion. The Swiss banks do. It's not completely a coincidence that a number of Swiss banks are successful. Having a solid, profitable domestic market to back you is very, very important. And after that, you go outside. For Credit Suisse, we've made clearly the choice to. We have our U.S. spread, so we're lucky to be in two of the wealthiest, most healthiest markets in the world, the U.S. and Switzerland. And after that, we project ourselves basically across emerging markets. You know, two of the largest three banks in Asia in assets are UBS and us, so two Swiss banks. And in the rest of the world, we are driving the same strategy. So we don't see today a need to do anything inorganic.
Do you feel a pressure from shareholders to give back? So once you're, extremely happy, or maybe even medium happy with with the kind of the overhaul, will you give back to shareholders?
Well, it's not only an objective. I think it's a big part of my CEO role is to reward shareholders, and they've been through a lot. I mean, I'm painfully aware that I had to dilute my shareholders very significantly, but there was no way to solve the Credit Suisse equation without a massive dilution of shareholders, whether it was the IPO of a Swiss bank at some point or whether it's the capital raise we did. Now, once we've done that and solved the capital question, I'm very grateful to my shareholders for the support we got for that. If you look at the last capital raise in June, we raised 4 billion. Our market cap is now up 7 billion. So that shows that there is belief in the market, but that 4 billion will be put to good use. And as we generate more profit and the bank does better in 18, we should be profitable in 17. I'm not making a profit forecast here. End of November, I think we'll have our first profitable year since the restructuring started, and 18 should be even better, and 19. So really the goal of all this is absolutely to return capital to the shareholders. We take on a very prudent dividend policy. And after that, it's for the board to decide, of course. This is out of my hands. My job is to run the bank to generate the maximum amount of capital. And then it's for the board to decide under what form this should return to shareholders. But everything is on the table, whether it's special dividends or share buybacks. But that's still, further down the road. We still need to execute well to get to that point.
How many questions do you get about compensation? And what do you tell actually?
Not many. So what's the question?
The question is, what will compensation look like for bonuses?
Look, if you look at what we've done and the board has done in 16, it was in terms of numbers a dismal year. We solved the DOJ issue, 5.3 billion fine, but we think it was key to lay the foundations for the future. But that led to very unattractive numbers. And in the end, we protected the franchise by paying our staff in order to protect the franchise. So I think this year, with the improvements in results, you've seen profits up 90%. There'll be a balance. So I think you shouldn't expect anything spectacular, but something fair. So not a big increase compared to the previous year, because the previous year probably more than what we should have paid just based on numbers, and this year a small increase. But fundamentally, number one objective is to operate profitably. Compensation is a derivative of that. Conversation shouldn't focus on compensation. The key thing is to perform well, and then the conversation on compensation is easier.
Tidjane, I also want to ask you about Brexit, because we had some figures from the EBA about some of the big banks here in the UK actually getting money out.
The EBA, that's moving to Paris, actually.
It is moving to Paris. Yeah, that was announced about 10 days ago. So what do you make of how banks are dealing with Brexit? How are you dealing with Brexit? Do you need to prepare for the worst and hope for the best?
I think that's correct. If you look at our stance, frankly, I think we've refrained from spectacular announcements, pronouncements on Brexit.
You've been one of the most cautious, actually.
I was once in my life a government minister, and I have only respect and appreciation for government officials. I always treat them with respect. They are doing an incredibly difficult job. I've been involved in international negotiations. These are tricky matters. It's very easy to make headlines, but these are tricky and sensitive matters that engage the future of millions of Europeans, so we don't take it lightly. We just watch things carefully. We have a big responsibility vis-à-vis our staff. We communicate with them as well as we can, but there is still a lot of uncertainty, so we've kept our options open so far.
But have you invested less, for example, in UK assets? And from a trading point of view, does it mean that you need to take bets that move you away from the UK?
We had a starting point that had nothing to do with Brexit. If you look at the strategy announced in 15, it was clear that we were going to build up the US, Switzerland, Asia, emerging markets, that London had a number of difficulties. We had put all our derivatives trading in London, and that created a specific situation which we needed to deal with as we deleveraged the bank. I reduced its balance sheet. So we have reduced our portfolio of derivatives in the UK very significantly, but that has nothing to do with Brexit. It was just, and as the PRA would want us to do at the Bank of England, taking our business back to a profitable position in the UK, which it hadn't had for a long time. So we're now back firmly on a path to profitability. It's back to my central point. The only thing in business, the main thing is to be profitable everywhere. So we have sadly eliminated more than 3,000 positions in the UK, but this is all to get the business in a position where it's healthy and it has a healthy future. And that's really what we've been focusing on.
And you haven't ever, I think, said much on actually where, if you were to move operations in EU, where they would be. Is that just because you want to be very respectful of politicians, or
keep our options open? It's a fluid situation, as everybody knows. There's still a lot in discussion. We've been quite clear about the options we're looking at. First of all, for the wealth management business, this is not a major issue. So you're only talking about the trading and market activities. And then we have Dublin. We set up in Dublin 2-3 years ago. We have Luxembourg, which has always been a hub for our European operations. You have Paris, which has always been important for us. You have Madrid. Unlike many other banks, we don't have big operations in Frankfurt. So this is our footprint: London, Dublin, Luxembourg, Paris, Madrid. And you can expect the ultimate answer to be some combination of those 5 cities.
Okay, we have to talk Bitcoin. How excited are you to talk about Bitcoin? What exactly is Bitcoin? I mean, we talked about it briefly when I came in Zurich.
A brief answer. I clearly got in hot water by answering it last time. No, look, blockchain is a very interesting technology. I think it has a lot of applications, a lot of potential. The distinction I'd like to make is between digital currencies and cryptocurrencies. I think digital currencies are interesting and have potential. And actually, central banks are looking at it to try to give it the characteristics of a currency. Cryptocurrencies are a different matter. And what I have said, and I will stand by that, is that there are transparency and compliance issues around the crypto. Everybody knows the etymological meaning of crypto, part of currency. So we are completely open. We're part of R3. It's a consortium of all banks to look at blockchain. Blockchain has a lot of potential, a lot of applications. It may lead someday to a digital currency that is broadly accepted. But we are cautious vis-à-vis Bitcoin because we think it has a number of unattractive characteristics.
Can it become attractive if it's regulated properly, or is it just too risky at the moment?
Of course, if it's regulated properly. But I know that central banks are looking actively at what can be done, what should be done.
To regulate it?
Yeah, and at that point, it will become just another asset or another asset class that can be traded. I mean,
a central bank would never adopt it, or would it?
You don't have to ask me.
Talk to me then a little bit about regulation and Basel.
Look, things are moving in the right direction. We just got a pronouncement on November 22nd from the Federal Council in Switzerland, postponing a number of changes. So I think as banks have rebuilt their balance sheets and the risk, and we're thrilled, frankly, that the FSB moved Credit Suisse down as a risk to the global financial system. That was, for me and the team, a big day, because it's external validation of all the hard work we've done to reduce the level of free assets and de-risk the balance sheet. So to hear the FSB saying that we present less of a risk for us was a big day. Banks have de-risked, de-leveraged, reduced their balance sheet, and I think the global financial system is safer. I will never say safe, but certainly safer.
MiFID, I know we talked a little bit last time I came over for the last results about some of the pricing structure, but who do you think ultimately will be the winners and losers of MiFID? Oh my God, I wish I knew the answer to that question. I think a lot of people wish they knew.
Exactly. No, look, I talked to our... I'm painfully aware of all the questions I don't know the answer to. So I talk to the people at Credit Suisse who know or should know, and what I can tell you is that they don't know. We've been, or they say they don't know. We've been clear that we're not going to charge for fixed income research anymore. And after that, look, it's a complex situation that's going to evolve. It's going to depend on what the different players do. So I think we probably have to come back to this in the coming months.
Mr. Tidjanthiam, thank you so much for
you,
joining
Ms.
us today on Bloomberg Surveillance. That, of course, is the CEO of Credit Suisse.